Alright, this is the final lesson, lesson 12 on the Contopian pipeline. We're going to move on to the IDE or the back tester. So far, everything we've done is in the research platform. Now we're going to move into IDE and conduct the back test. To start out, let's create a skeleton algorithm, and we need to import the pipeline and add a make pipeline function so that it creates an empty pipeline. So this is the code from pipeline, from Contopian.pipeline. You import the pipeline and then define the initialize and then bracket context, and make pipeline is equal to make pipeline. So this is the instantiations of the make pipeline. And right now the make pipeline is just empty. Okay, remember in initialize, if you're not familiar with the IDE, it gets run once. Okay, in the beginning, at the start of the algorithm. Okay, and the next one is attaching a pipeline. Recall that in research we ran make pipeline to create an instance of our pipeline object, and we use run pipeline to run our pipeline over a specified time or date range. We can't do this with IDE, rather we cannot safely do this in an algorithm. We have to somehow allow the simulation to run our pipeline for us. In order for the simulation to run our pipeline, we must attach our pipeline with attach pipeline. The attach pipeline function requires two arguments, reference to our pipeline object, which we are to define ourselves, and a string name for the pipeline, which can be decided arbitrarily. Let's import attach pipeline and attach our empty pipeline in our skeleton example. So here we import pipeline, and we also import the attach pipeline. So in this example here, we have attach pipeline, my pipe, which is this one here, and we give it a name called my pipeline with open and close quotation, and this is still the same. Now that the pipeline is attached, it can be run once each day of the simulation. If the algorithm is backtested or live traded from those period, our pipeline will be run once on each day of the week, 5 times in total. Attach our pipeline will produce a new output data frame each day. The daily output is similar to the output of the run pipeline. However, the output data frame in our algorithm will not include the date in the index. At the current simulation date is implied to be the date of our pipeline computations. Right, the pipeline output. The daily output of our pipeline can be retrieved using the pipeline underscore output in before trading start. Pipeline underscore output requires the name of the attached pipeline as an argument and returns the output data frame for the current date or in the simulation. Let's import pipeline underscore output and modify our skeleton example to store our pipeline output in context each day. Here we have the pipeline output being imported along with the attached pipeline. So where does it come in? It comes in actually this portion here. So before trading start of each day, we basically store my pipeline, which refers to this pipeline here, which obviously refers to my pipe, and using the pipeline underscore output, which functions that we have import, store everything into the context.output itself. Our skeleton example now produces an empty data frame with 8,000 rows each day. Why empty? Because we haven't defined anything here yet. So we're gonna, from the research that we've done so far over the last 11 lessons, and basically copy most of the codes and put it in here. Okay, let's go through these. So here we have import the pipeline. So these are all the same, but we do need to import the US equity pricing, simple moving average from the Morningstar, import the Q1500, and we also need to include the codes here for our pipeline here, which is all of these here. Okay, so we have the base universe, we also have the 10 and 30-day simple moving average, the percentage difference, the shorts and the longs based on the top and bottom 25, and then we combine those stocks that we want to long and short, and then store it into pipeline and return to our algorithm. It will look like this on every day. Okay, here is the computation of the weights itself. Now we define this ourselves. My compute weights using the context here is that we want to have half of our portfolio into all the long stocks, and based on how many longs that we have. Now we have 25, so it's 0.5 divided by 25. It may be that we want to change from 25 to 50 in the future, so here we just write it in as a variable. The short weight is minus 0.5 divided by however many assets that we have in the short list. So in essence, this becomes dollar neutral. Half our portfolio is long, half of our portfolio is short, and these are being returned. Now before trading start, we run the pipeline to store the output into the context itself, and then the longs we have within the output, the longs, and these are input into this, and then the shorts again stores in here. The index here basically here means that it refers to the actual so-called equity or the asset tickers that is under the longs, and here is really referring to those in the shorts. Under the definition of my rebalance, this is rebalancing of the portfolio on a weekly basis. Using a for loop, we basically loop through our positions and check if the security not in the long, okay, not in the context of longs, and security not in the context of shorts, then we will trade. Okay, if it's not in there, then we trade. If it's already in there, we're gonna do it slightly differently. Okay, so this is our my rebalance function, and this is rebalance on a weekly basis. We're gonna loop through the security in the context of our portfolio position. So this is the existing portfolio positions that we have, and we're basically gonna loop through that. We go through them one by one and say, hey, does it belong to the longs? Does it belong to the shorts? And can it be traded? If we look through all of these and it fits all of these criteria, then we target, or rather we sell off everything. We set the actual target percentage down to 0. And the next for loop, if it's already in the context of longs, if it's already in the longs, then we actually buy them. Okay, and if it's in the context of shorts, we short them, and the weights is based on the weights that we calculated over here. Finally, let's put everything together and record some variables. I'm gonna clone that. Okay, while that's running in the background, let's walk through this and identify some things. So we already have this, we covered those, and now we actually have a schedule function. The function here that's scheduled to run is my rebalance. It starts in the beginning of the week, after the market is open, basically 1 hour after market is open, run this function. My record variable is run every day at the end of the market close. We haven't looked at this, so let's we already cover these. My compute will cover these. Before trading start, we also cover these. My rebalance also cover these. Okay, now this is what we haven't covered. What is this for? The purpose of this is to record variables and record how many longs we have, how many shorts we have, and also record our leverage as well. That's really all of the so-called codes. Let's go over to the IDE, and basically they already copy everything for you. We're gonna run this for 1 year, from 2015 to 2016, and we're gonna run the full backtest. Now this will take a while, and I will speed up this video and come back and describe the and explain a few things. Okay, that didn't take too long to one year of back testing. Our returns for our algorithm overall for that 1 year is up 7.2. The benchmark is only up 1.7, so we did better than the benchmark. We generate positive alpha. Beta was fairly neutral to the market. Sharp was a bit on the low side. The volatility is quite high, and the drawdown is also quite high as well. This is really the output of your back testing. You can go through and look at the transaction details and check your daily position in terms of gains and loss. This is the output, log output. There are some errors here or warnings here that some of these hasn't been actually filled at all. So it might pay to actually double check what happened there, and to make your algorithm more robust, you might want to actually account for these as well. This is the returns on a monthly basis, rolling 3 months, 6 months, and 12 months basis. This is for the same thing for the benchmark. For your alpha, your beta, your Sharpe ratio, your Sortinol, your volatility, the benchmark volatility, and also finally the maximum drawdown. So that's really the end of the tutorial on the Quantopian pipeline. I hope you have found it useful. I've been really happy to actually cover this with you. If there's anything that you'd like me to cover in the future, please feel free to drop me a line on anthony@gmail.com. Thank you.